Question 1, scenario-based. David owns a home in Georgia that he insures under an Hothry homeowners policy. During a recent storm, a tree fell onto his house, causing significant roof damage and allowing rainwater to seep into his living room, damaging his furniture and flooring. David files a claim under his policy. Which of the following statements about his coverage is most accurate? A. The policy will only cover the removal of the fallen tree, but not the water damage inside the house. B. The policy will cover both the roof damage and the water damage to the living room, subject to the policy's deductible. C. The policy will cover the roof damage, but exclude any damage caused by rain entering through the broken roof. D. The policy will not cover any of the damage because the storm is considered an act of God, which is excluded under an Hothry policy. Answer B. Explanation. The Hothry homeowners policy provides open peril coverage for the dwelling and named peril coverage for personal property. The damage to the roof from the fallen tree is a covered peril. Once the roof is damaged, resulting water damage inside the home is also covered as a consequential loss. However, the removal of the tree itself may be limited to specific coverage amounts depending on policy terms. Incorrect options is incorrect because water damage caused by a covered peril, in this case a fallen tree, is covered. C is incorrect because consequential water damage from a covered peril is generally included. D is incorrect because acts of God are not a blanket exclusion under homeowners policies. Question 2. Which of the following is not considered a valid non-forfeiture option in a whole life insurance policy? A. Cash surrender value. B. Extended term insurance. C. Paid up additions. D. Reduced paid up insurance. Answer C. Explanation. Non-forfeiture options allow a policyholder to retain some benefits from their policy if they stop paying premiums. The three primary non-forfeiture options are cash surrender value. The policyholder receives the cash value of the policy. Extended term insurance. The policyholder can use the cash value to purchase term insurance for specified period. Reduced paid up insurance. The policyholder uses the cash value to buy reduced amount of fully paid up insurance. Paid up additions option C is not non-forfeiture option. Instead, it is dividend option in which the policyholder uses dividends to purchase additional coverage. Question 3. A business owner's policy BOP provides business income coverage under which of the following conditions? A. The business income loss is covered only if the policyholder can prove the loss was caused by theft. B. The policy automatically includes business income coverage, but only for a maximum of 30 days. C. The business income loss is covered as long as the suspension of operations is due to a covered peril. D. Business income coverage must be purchased separately under a BOP and is not automatically included. Answer C. Explanation. The business owner's policy BOP automatically includes business income coverage, which covers loss of income resulting from a suspension of operations due to a covered peril. The policy covers lost net income and continuing expenses during the restoration period. Incorrect options is incorrect because theft is not a requirement for business income coverage. B is incorrect because the coverage period can extend beyond 30 days depending on the policy terms. D is incorrect because business income coverage is automatically included in most standard BOPs. Question 4, scenario-based. Sarah is a licensed insurance producer in Georgia. Her client, Robert, applies for a term life insurance policy but intentionally omits his history of heart disease from the application. The policy is issued and 2 years later, Robert dies of a heart attack. The insurer denies the death benefit claim, citing the misrepresentation. Which of the following actions by the insurer is legally valid under Georgia law? A. The insurer can deny the claim because the misrepresentation was material to the policy issuance and there is no time limit on contesting fraud. B. The insurer must pay the claim because the 2-year contestability period has passed. C. The insurer must pay a partial benefit, reducing the payout by the amount of premiums Robert would have paid if he disclosed his heart condition. D. The insurer can only deny the claim if Robert missed a premium payment during the policy term. Answer A. Explanation. Under Georgia law, insurers have a 2-year contestability period during which they can deny claims if material misrepresentations are discovered. However, fraudulent misrepresentations have no time limit and can be contested at any time. In this case, Robert's omission of his heart disease is fraudulent, allowing the insurer to deny the claim even after 2 years. Incorrect options. B is incorrect because fraud is not subject to the 2-year limit. C is incorrect because there is no provision for paying partial benefit in cases of fraud. D is incorrect because premium payment status is irrelevant in this scenario. Question 5. Which of the following perils is typically excluded from a commercial property policy, causes of loss. Special form: A, theft; B, earthquake; C, vandalism; D, fire. Answer: B, explanation. The causes of loss. Special form provides open peril coverage, meaning it covers all risks unless specifically excluded. Earthquake is commonly excluded peril, and coverage must be purchased separately through an endorsement or separate policy. Incorrect options: is incorrect because theft is covered under the special form. C is incorrect because vandalism is typically covered. D is incorrect because fire is covered peril. Question 6. Which of the following statements about COBRA continuation coverage is true under Georgia state law? A. COBRA applies to all employers, regardless of size. B. COBRA provides continuation coverage for up to 12 months. C. COBRA applies to employers with 20 or more employees. D. COBRA requires employers to pay 50% of the premium for continuation coverage. Answer: C. Explanation. COBRA Consolidated Omnibus Budget Reconciliation Act applies to employers with 20 or more employees and allows employees to continue their group health insurance coverage for up to 18 months after a qualifying event. Employers are not required to pay any portion of the premium during the continuation period. Incorrect options: is incorrect because COBRA only applies to employers with 20 or more employees. B is incorrect because the standard coverage period is 18 months. D is incorrect because the employee must pay the full premium including any administrative fees. Question 7, scenario-based. James owns a trucking company in Georgia and insures his fleet under a commercial auto policy. One of his drivers, Tom, causes an accident while hauling goods for another company under a subcontract. The injured party sues both James's company and the subcontracting company under the commercial auto policy. Which of the following is true regarding liability coverage? A. The subcontracting company's insurance will be primary and James's policy will be excess. B. James's policy will provide primary coverage for the accident. C. Both policies will share the liability equally. D. The injured party must file separate claims against both companies. Answer: B. Explanation. Under a commercial auto policy, the vehicle owner's policy is typically considered primary. Since James owns the truck involved in the accident, his policy will provide primary liability coverage. The subcontracting company's policy may provide excess coverage, but the primary responsibility lies with the owner of the vehicle. Incorrect options: is incorrect because the vehicle owner's policy is primary, not the subcontracting company's policy. C is incorrect because liability is not automatically shared equally. D is incorrect because the injured party can file claim against either party but does not need to file separate claims. Question 8. Which of the following is a valid defense against a claim of negligence in a liability insurance case? A. Comparative negligence. B. Strict liability. C. Res ipsa loquitur. D. Absolute liability. Answer: A. Explanation. Comparative negligence is a legal defense that allows a defendant to reduce their liability by proving that the plaintiff was partially at fault for the incident. Georgia follows a modified comparative negligence rule where a plaintiff can only recover damages if they are less than 50% at fault. Incorrect options: B is incorrect because strict liability imposes liability regardless of fault. C is incorrect because res ipsa loquitur is a doctrine that shifts the burden of proof to the defendant. D is incorrect because absolute liability applies in certain cases regardless of negligence. Question 9. Which of the following would be considered a violation of fiduciary duty by an insurance producer in Georgia? A. Disclosing a client's health information to an underwriter with the client's consent. B. Depositing premium payments into separate trust account for clients. C. Commingling client funds with personal funds. D. Providing accurate policy details to potential client. Answer: C. Explanation. Insurance producers have a fiduciary duty to handle client funds responsibly. Commingling client funds with personal funds is a violation of fiduciary duty and is prohibited under Georgia law. Producers must maintain separate accounts for client funds to ensure they are properly managed. Incorrect options: A is incorrect because disclosing client information with consent is allowed. B is incorrect because using a trust account is a proper way to handle client funds. D is incorrect because providing accurate policy details is part of the producer's duty. Question 10. Which of the following statements about insurance fraud penalties in Georgia is true? A. Insurance fraud is a misdemeanor offense, regardless of the amount involved. B. Convicted individuals may face a fine but not imprisonment. C. Insurance fraud can be prosecuted as a felony with fines and imprisonment. D. Only insurance producers can be prosecuted for insurance fraud. Answer C. Explanation. In Georgia, insurance fraud is a serious criminal offense and can be prosecuted as a felony. Penalties may include fines, imprisonment, and restitution to victims. The law applies to both insurance producers and policyholders who commit fraudulent acts. Incorrect options is incorrect because fraud can be a felony, not just a misdemeanor. B is incorrect because imprisonment is a possible penalty. D is incorrect because anyone committing fraud can be prosecuted, not just producers. Question 11. Which of the following is required for an insurance contract to be legally enforceable in Georgia? A. The insured must be at least 21 years old. B. The policy must be notarized. C. There must be an offer, acceptance, and consideration. D. The insured must have a financial background check. Answer C. Explanation. For any insurance contract to be legally enforceable, it must have offer, acceptance, and consideration. The offer is typically the application, acceptance is the insurer's issuance of the policy, and consideration refers to the premium payment made by the insured. Incorrect options is incorrect because the minimum age for entering into a contract in Georgia is 18 years old, not 21. B is incorrect because notarization is not required for an insurance policy. D is incorrect because a financial background check is not a legal requirement for all insurance contracts. Question 12. Under Georgia law, how many days does an insured have to provide written notice of loss to the insurer after a covered event? A. 10 days. B. 20 days. C. 30 days. D. As soon as reasonably possible. Answer D. Explanation. Georgia insurance law requires that written notice of loss be provided to the insurer as soon as reasonably possible after a covered event occurs. This allows the insurer to begin processing the claim in a timely manner. Incorrect options, they B and C are incorrect because no specific number of days is required by Georgia law. The key phrase is reasonably possible. Question 13. Which of the following would most likely be covered under a Georgia homeowner's policy? A. Damage from a flood. B. Damage caused by termites. C. Theft of personal property. D. Wear and tear on the roof. Answer C. Explanation. A homeowner's insurance policy typically covers theft of personal property. However, flood damage and termite damage are excluded perils and require separate policies or endorsements. Wear and tear is also excluded as it falls under maintenance issues, not covered perils. Question 14. In Georgia, which of the following parties is responsible for regulating insurance companies and enforcing insurance laws? A. The Georgia Department of Revenue. B. The Georgia General Assembly. C. The Georgia Commissioner of Insurance. D. The Georgia Supreme Court. Answer C. Explanation. The Georgia Commissioner of Insurance is responsible for regulating insurance companies, enforcing state insurance laws, and protecting consumers. This office ensures that insurers comply with Georgia regulations. Question 15. Which of the following statements about rebating is true under Georgia insurance law? A. Rebating is allowed if the insured requests it in writing. B. Rebating is only allowed for policies over $1 million. C. Rebating is prohibited and considered an unfair trade practice. D. Rebating is allowed if both parties agree. Answer C. Explanation. Rebating is the practice of offering a kickback, commission, or gift to induce a person to purchase an insurance policy. In Georgia, rebating is illegal and considered an unfair trade practice. Question 16. Scenario-based. Liam operates a bakery in Georgia. He purchases a business owner's policy, BOP, that includes business income coverage. A fire damages the bakery, forcing him to close for repairs. Which of the following costs would not be covered under the business income coverage? A. Lost revenue during the closure period. B. Employee wages during the closure period. C. Utility bills for the bakery during the closure period. D. The cost to repair the fire damage. Answer D. Explanation. Business income coverage provides compensation for lost income, employee wages, and ongoing expenses like utilities during a closure caused by a covered peril. However, the cost to repair the fire damage would be covered under property coverage, not business income coverage. Question 17. Which of the following statements about Georgia's workers' compensation laws is true? A. All employers must provide workers' compensation coverage. B. Only employers with more than 50 employees are required to provide coverage. C. Employers with 3 or more employees must provide coverage. D. Workers' compensation is optional for all Georgia employers. Answer See explanation. In Georgia, any employer with 3 or more employees must provide workers' compensation insurance to cover workplace injuries or illnesses. Question 18, scenario-based. Jessica is a Georgia resident who purchases a personal auto policy PAP while driving in Florida. She causes an accident that injures another driver. Florida has higher minimum liability limits than Georgia. What will Jessica's policy cover? A. The claim will be denied because the accident occurred outside Georgia. B. Jessica's policy will automatically adjust to meet Florida's minimum liability limits. C. Jessica's policy will only cover up to Georgia's liability limits. D. Jessica must purchase additional coverage before driving out of state. Answer. B. Explanation. Most personal auto policies PAPs include an out-of-state coverage provision which automatically adjusts to meet the minimum liability limits of any state in which an accident occurs. Question 19. In Georgia, how long must insurers retain policy records after the policy terminates? A. 1 year. B. 3 years. C. 5 years. D. 10 years. Answer. C. Explanation. Under Georgia law, insurers must retain policy records for 5 years after the termination of the policy. This requirement helps ensure compliance with regulatory audits and investigations. Question 20. Which of the following actions by an insurance producer would be considered a violation of Georgia's Unfair Claims Settlement Practices Act? A. Denying claim after thorough investigation. B. Requesting additional documentation for claim. C. Failing to acknowledge claim within reasonable time frame. D. Providing the insured with detailed explanation of claim denial. Answer. C. Explanation. Under Georgia's Unfair Claims Settlement Practices Act, failing to acknowledge and act on claim within reasonable time frame is considered an unfair practice. Insurers and producers are required to handle claims promptly and fairly. Question 21. What is the minimum liability limit required by Georgia law for bodily injury per person in an auto insurance policy? A. $15,000. B. $25,000. C. $50,000. D. $100,000. Answer. B. Explanation. Georgia law requires auto insurance policies to have a minimum liability limit of $25,000 for bodily injury per person. The minimum for bodily injury per accident is $50,000 and property damage is $25,000. Question 22. Which of the following is an acceptable reason for an insurance company to cancel a homeowner's policy in Georgia? A. The policyholder turned 65 years old. B. The policyholder filed a claim within the first 60 days of the policy. C. The policyholder failed to pay the premium. D. The policyholder purchased additional coverage from another insurer. Answer. C. Explanation. In Georgia, the homeowner's insurance policy can be cancelled if the policyholder fails to pay the premium. However, an insurer cannot cancel policy solely because of the policyholder's age or the purchase of coverage from another insurer. Question 23. Under Georgia law, how many hours of continuing education C are required every 2 years for licensed insurance agents? A. 12 hours. B. 15 hours. C. 24 hours. D. 30 hours. Answer. C. Explanation. Licensed insurance agents in Georgia must complete 24 hours of continuing education C every 2 years, with at least 3 hours focused on ethics. Question 24. A temporary insurance license in Georgia is valid for a maximum of how many days? A. 30 days. B. 90 days. C. 180 days. D. 365 days. Answer. C. Explanation. In Georgia, a temporary insurance license is valid for 180 days. It allows individuals to act as insurance agents while completing their licensing requirements. Question 25. Which of the following individuals would be eligible for the Georgia Fair Access to Insurance Requirements Fair Plan Policy? A. A homeowner who lives in a flood zone. B. A homeowner who is denied coverage due to the property's condition. C. Homeowner who owns high-value luxury home. D. Homeowner with history of filing multiple claims. Answer. B. Explanation. The Georgia Fair Plan is designed to provide basic property insurance to homeowners who are unable to obtain coverage in the voluntary market, typically due to the property's condition or location. Question 26. Scenario-based. Emma's insurance company is denying her claim after fire destroyed part of her home. She believes the denial is unfair and wants to file a complaint. Which Georgia regulatory body should she contact? A. Georgia Department of Public Safety. B. Georgia Department of Revenue. C. Georgia Department of Insurance. D. Georgia Attorney General's Office. Answer. C. Explanation. If a policyholder believes their claim was unfairly denied, they should contact the Georgia Department of Insurance, which oversees insurance companies and consumer complaints. Question 27. In Georgia, how long does an insurer have to provide a written explanation for denying a claim after receiving a written request from the insured? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer. C. Explanation. Georgia law requires insurers to provide a written explanation for claim denials within 30 days of receiving a written request from the insured. Question 28. Which of the following actions by an insurance producer would be considered twisting under Georgia law? A. Offering a discount on premiums. B. Recommending an additional policy to a client. C. Convincing a client to replace an existing policy with a new one by providing misleading information. D. Failing to disclose their commission. Answer. C. Explanation. Twisting refers to persuading a client to replace an existing policy with a new one by using false or misleading information. It is illegal under Georgia insurance law. Question 29. Scenario-based. John is involved in a minor car accident in Georgia, but the at-fault driver does not have auto insurance. Which coverage in John's policy would help cover his medical expenses? A. Collision coverage. B. Comprehensive coverage. C. Uninsured motorist coverage. D. Liability coverage. Answer. C. Explanation. Uninsured motorist coverage protects the insured when the at-fault driver has no insurance. It covers medical expenses, lost wages, and other damages resulting from the accident. Question 30. Which of the following is an example of an unfair trade practice under Georgia insurance law? A. Offering a client a lower premium for bundling policies. B. Providing a client with a detailed policy explanation. C. Failing to promptly respond to a claim inquiry. D. Informing a client of a coverage exclusion. Answer. C. Explanation. Failing to promptly respond to a claim inquiry is considered an unfair trade practice under Georgia law. Insurers must handle claims and inquiries promptly to ensure fair treatment of policyholders.